In order for traders to stay on the right side of the market, the goal is to identify the proper channel, to follow the trend line rule, and identify where the market is going. And right now I can see that this downtrend has a break in new extreme with the final push to new extreme, and prices are right now reversing back above the exponential moving average. So now I have the dilemma, because this uptrend just created a break in a new extreme, but the market is not reversing down, instead it's pushing back above EMA. So I need to decide if I'm going to rely on this tiny channel or I'm going to look for any wider pattern. As I can see price is pushing higher, I can see big bullish bar rejection without touching the exponential moving average, which leads me to believe that prices at this point on are most likely heading from the bottom all the way to the top of this trading range, which means I need to identify the pattern. So what I'm going to do, I'm going to connect these first two swings. I'm just going to copy it, put it at the top, and notice how nicely prices are fitting inside of this channel. So this gives me direction, which is bullish, and I'm looking high probability setup to go long if it forms correctly. So prices are correct. I cannot just go long anywhere on the chart. I need to wait for prices to correct the key entry point. At the same time, I need to redraw the shortened channels because there are corrections even for the bigger channels. And I only want to go long after there is a break in new extreme form for this downtrend. So notice I have a new high, first entry long, pull back, second entry long. And now we have high-low confirmation of the second entry long. Now this is already a very tempting setup. And I was almost taking this. Fortunately, I didn't take it because I noticed we have a congestion. We are stacking a little bit. Notice 1, 2, 3, 4, 5, 6, 7, 8 bars stacked right next to each other. Notice how sideways the prices are right now getting. So for that reason, I decided to wait here, be a little bit patient. We also didn't truly create new extreme, which is not that big of a deal. But given the congestion, you want to respect it. If you took this trade right here, you took a chance here, it's not that big of a deal. You follow the rules. Unfortunately, you can see you got stopped out just a little bit. Okay, but you can see that you have a little bit stacked bars walking sideways for quite some time. Now notice what happened next. This downtrend finally created a break and a new extreme. Now is anything changing from price action perspective? No, I'm still expecting new extreme to be formed. Okay, I have this uptrend. We're heading from the lows all the way to the highs. Market is still bullish. All right. And I'm going to reset the count after second entry long because this is where how we can reset the count. So I have new high, first entry long, pull back, second entry long, count reset, first entry long, pull back, second entry long. And this looks more like a visual first leg, second leg down, the two-legged high probability setup. Now this is two-legged pullback. Can we go long here? Well, not that much because you're still inside this consolidation. However, I'm going to mark it aggressive, not solely because it is a second entry long, but mainly because it is a failed breakout out of this congestion. Most breakouts of trend ranges will fail, and this small congestion is just a smaller version of a trend range. Notice you broke to the downside, which is against the main trend, and a lot of sellers were selling below this big bearish bar, but the correction just reached new extreme, and this uptrend is new high. So everybody's going to go short here is going to get trapped because this is where the correction is exactly ending, and because you have a new extreme and the bullish push phase is starting. So for that reason, aggressive trader can go long here, good enough for a scalp. Notice, even if you're swinging, your stop loss goes one tick below the single bar, so you would have survived. We have another high low, but we're really congested now. Even though it is tempting, since we are respecting congestion here, I'm going to respect it here. I don't want to cherry pick, so no really safe way for us to enter. A market kept pushing higher. So you can see this is how we respect the congestion. And personally, I was just sitting on my hands the entire time here. It was just too sideways. I wanted to see a cleaner structure. Now notice market created a break and new extreme. Now we have to reassess what the price action is doing, because I can see that we are in a trend range structure. Can I even think about selling? Well, first of all, I cannot just sell yet. Market was too steep and too bullish. But am I even thinking about reversal pattern? Because if I want to sell, I want to see first reverse the structure, reverse the pattern. Failed second entry long, failed 2 attempts because there's a break in new extreme. Now there's a little trick that I can use that's going to help me identify if I'm looking for reversal or I expect continuation of the uptrend. Notice we have 2 examples, downtrend here and uptrend here. And there's a difference in structure. This downtrend has a clear break and new extreme. Notice the sideways strong correction, strongly closing above EMA and pushing all the way down. But this is not happening on this uptrend. From the very bottom all the way to the top, you're barely closing below EMA, just barely, and this is looking more steep. There is no significant correction like this. There is just one steep, seamless leg working to the upside. So this is already indicating a little bit different structure in price action, which is indicating to us that we definitely don't want to sell. And also, if I'm going to take a look at this downtrend started from this swing without any swing earlier. But let's take a look at this uptrend. Notice my short-term channel started here, but there's even swing here and swing here. So there's already price action forming at the bottom, and notice this channel is starting to get a little bit tight. So I'm using all these clues to help me identify what's going on. And if I'm going to look for channel from the very low where the uptrend may start, notice it actually allows me to find a channel which is getting confirmed right here. So this is how you're looking for slightly stronger channel once you're playing the trailing range, because from the very bottom all the way to the top, this was a very steep bullish move, which is giving us right now still bullish uptrend. You can see how EMA is pointing up. We have a new high. We have only first entry long, so I cannot go long, but notice prices broke this key level. Most breakouts fell, they tested it, and now you have a breakout pullback. However, this is still not a great setup to go long. Okay, prices are correcting, so I'm going to redraw the channel. What am I expecting at this point on? Well, we are breaking the uptrend, so I expect new extreme to be formed for this uptrend. But there is a higher chance the prices may come back all the way back to this breakout area again. Alright, let's see what's going to happen. We have a new high, first entry long. And we have the second entry long, two-legged pullback. Now, how do we know that the prices are going to go back all the way to the support? Well, I don't know that, but since I see the first leg here, a market likes to move in pairs of twos, just like we have move here. Notice two-legged pullback. I can just imagine possible two-legged pullback to this key level. So this is how I'm always playing the price action when I'm watching for pullbacks, just measuring the first leg and trying to project where the second leg is going to be. Now, here's important part what's going to happen, because if you're afraid that the trend range is going to take precedence and you're going to trend all the way down, the key level is not going to hold. However, if the key level is going to hold after two-legged pullback and you're going to push above EMA, this is confirmation that you're going to form new extreme and the market is bullish. So we can see that, okay, market is holding twice above this important key level. Resistance now acting as a support. So this is a good sign for the bulls, and a lot of bulls are starting buying here. Going long here would be decent if we had a little bit better bar. Notice a little bit doji-ish. If you have stronger bullish bar, you can actually consider high-low here, because it's confirming the second entry long here. Downtrend has a break new extreme, so the downtrend played out, visual two-legged pullback. Just that the signal bar was a little bit not great, but I'm expecting to get right now felt second entry short above EMA to create new high, and we never get it. We already created new extreme for this uptrend. So once I'm watching this, I'm pausing my longs because we just have new extreme. Notice another push up. Also, a lot of times what happens is there's additional smaller trend range forming at the top. Now, why am I anticipating trend range? Well, because we just have a break new extreme and EMA is flattening. This is very typical. Notice EMA is pointing up, and right now EMA is completely flattening, starting to swing up, down, up. So I'm predicting possible trend range because I have a new high, so there's no reason for me to look for longs. However, can I go short here? Not really. This was a very bullish market. I will only go short if I see a proven trend in opposite direction. So this is no trade zone. This is one of those zones where it's too high to go long and too bullish to sell. So I'm just waiting. You can see the market is getting more bullish than I expected. Just going to redraw the downtrend. Not really interested in any setup. Notice 1, 2, 3, 4, 5, 6. 6 bars stacked right next to each other. Pure congestion. Just like here, I'm ignoring this. When EMA is in the middle of these bars, this is the worst type of congestion. I want to wait. Okay, we push higher. Okay, and we're pushing higher. So at this point on, the market is getting a little bit more bullish. High, low, high, low, high, low, high, low. So I cannot argue with the market. There's still residual bullish momentum left. Okay, you have first entry short, second entry short failure, congested, but notice you have high, low confirmation of this felt second entry short. And this right here formed with a great signal bar. Look at the strong bullish tier 1 signal bar. testing this small key level, testing the EMA. It was breakout pullback of this smaller congestion. This is a congestion you broke higher, pull back, tested it with the direction that is bullish, decent setup to take a chance, and market keeps working higher. Now at this point on, I can move my resistance slightly higher, something like this. Can I go long here? I cannot. First of all, I have a micro double top which resets the count, but even if this is second entry long, it's too high up. There is no other trend, just can't go long at this point. But there is only first entry long because I have micro double top, which means I have to reset the count. Even though it probably work for a scalp, it's not worth it. Okay, so I'm going to redraw the bearish downtrend. And what am I expecting? Since we are playing the trend range, I'm expecting for prices to go from the top all the way down to the bottom. We have a second entry short, but still far away from EMA doji. Can't take it. No good setup here. I'm just watching price action go. Okay, I can see that we have a spike and a channel pattern. There's pretty much no good short here. We finally tested the key level again, but we have this channel working to the downside. Just following the price action. We have second entry short, but this shortened channel is in play. There is no break, no new extreme. Okay, market created push to a new extreme. So this spike and channel played out with a break and a new low. So we can expect possible reversal. But at this point on, we can see that the FOMC news announcement is going to come soon. So I don't want to be trading around FOMC because it is very slow. It generally stalls a bit. And today it didn't really stall. You can see we had quite a decent bullish push. But that doesn't mean I'm going to risk taking the setup. I'm just going to ignore this because you can see this is exactly what can happen. So you don't want to be pushing it. This is the FOMC announcement. Very volatile, very slow generally prior to FOMC. You don't want to be trading half an hour before FOMC 100%. And now that you see the FOMC announcement, I'm just going to give it a couple more minutes to cool down because this is extremely volatile. Okay, so we have downtrend working lower. So my goal is to identify a pattern again. So what I'm going to do, since I have a strong bearish sell-off, I need to find a proper pattern for this bearish sell-off. We have a downtrend working lower, nice fitting downtrend. Okay, I need to respect the correction as well. I'm just playing with the pure price action. What is the bias? Bias is bearish. What am I expecting? New low to be formed. Simple price action at this point on. Okay, break, new extreme, indicating that this uptrend just played out. It reached new extreme, and we have new low, first entry short, pullback, second entry short. So this right here is a second entry short, two-legged pullback, high probability setup, closing below EMA. This downtrend was extremely strong, so it's probably going to get retest of a new extreme. And you can see you're not selling unless you get a break new high. Key entry point is holding. Quick, easy scalp. And you have a new high, first entry long, pullback, second entry long, failure. Very tempting for second entry long, but the market is very sideways. Multiple bars stacked right next to each other. Unfortunately, a little bit more risky, but you can see how the market is reacting to high probability setups. Downtrend is the main pattern, correction played out, and the key entry point is holding EMA. So this is a good sign for us that we can take sell setups, and we're just counting the entries to see if there's going to be a high probability setup. Okay, so the market formed new extreme, so I cannot really go short just yet. There is no short entry because we just have break new extreme. Okay, I'm just gonna new low here and new high here. So I have a break new extreme. What am I expecting? Well, this is pretty much unclear because the downtrend has a break new low, but even this uptrend has a break new high, and the bias mainly was bearish. So when I'm watching this and I see break new high, I'm more leaning towards the bearish bias, but I can't really sell just yet because I don't have any wider pattern right now to give me confirmation I can sell. All I can do is just wait and see if there's some nice long trap, maybe fell second entry long, but there is no fell second entry long. Everything is above EMA, and right now you can see another congestion. 10 bars going sideways, EMA getting into these bars. There is no long or short setup. Just no room for prices to scalp before reaching the extremes. Too unclear. And you can see both sides are getting trapped. Pretty much no setup. We almost had lower high breakout pullback, but the signal bar is horrible and it didn't really broke out of the trend range that much, so just still part of the trend range. No clear setup. At this point on, I'm just watching the price action go. Now, what is the setup? What is the bias? The bias is bearish, because now I can clearly see that the bulls are really struggling to go higher, and the main bias we traded down into the trend range was bearish. So I'm already thinking more that the market is going to break lower. I just cannot pull the trigger here because the bias is just too congestive like at this point on. You can see a new low, first entry short, second entry short, tempting, great bar, but I cannot sell. And market eventually kept pushing lower. Also new high, first entry long, pullback, second entry long, failure. So if there's a little bit lesser congestion, we can definitely make a case for going short here. Okay, so now we have another push down. So what I did, I was watching a little bit of a spike and a channel like this, because you can see that the prices is working lower more and more, even after the initial new low. But we have overshoot. Prices overshot my channel, which gets 2 confirmations of the lows. And what can overshoot mean? It can generate strong momentum in opposite direction. Notice how steep this move down was. Generally a good sign that this is overshoot. So right now I expect stronger bullish correction. I'm not necessarily buying. Of course I'm not buying, but I'm not even selling because we can definitely get stronger bullish correction. So I'm just going to be patient. We're far away from EMA anyway. Doji, not interested. Overshoot, I cannot sell just yet. Didn't trigger. And market keeps working higher. I'm just going to redraw a wider correction. Why I'm drawing it wider? Because after overshoot, you expect for prices to break the trend line or possibly even reverse. So we can see no good setup just yet. Okay, we pushed lower. This is looking like the bearish bias may resume. I was thinking a little bit more bearish, but you can see no setup and market strongly reverse back up. Okay, so notice what happened here. EMA flattened, and now there is some support forming here, here, and here. After this strong push above EMA, I have to identify there is some price level that the buyers deem to be worthy buying. Because there is some reaction here. I'm going to copy it, put it here, because I'm expecting the trend range at this point on. First break of this downtrend. Lower high and strong push below EMA. Okay, so I can see that we have first bullish leg, second bullish leg, break of this spike and a channel, followed by strong push below EMA. So notice I'm going to redraw the channel. Uptrend played out with the break, new high, 2-legged pullback. We also have a failed breakout above this trend range, and most breakouts will fail. We traded down, so the bias is bearish. And what is the setup I'm expecting? I'm looking for failed second entry long, because all the bullish trends played out, 2-legged pullback and a failed breakout, and we have new high, first entry long, pullback, second entry long. We have a great signal bar, tier 1 bearish signal bar, following the overall bias. I'm just waiting to sell at these highs after the correction plays out. First entry long, second entry long failure. This was my trade that I took. And you can see you even have new low, first entry short, pullback, second entry short, which is even a lower high confirming the failed second entry long earlier. So we have back-to-back high probability setup. EMA keeps holding. This downtrend is new low, and even potentially bigger channel needs to get new extreme. Great 2 high probability setups back-to-back. Now look at this strong bullish rejection. Okay, and this was what is indicating to us that something is different here when it comes to strong sell-off. Because if the downtrend is going to get new extreme, this is not what's supposed to happen. You were supposed to push lower, create new extreme here. The fact that you have such a massive bullish rejection, if you combine it with the overshoot, that tells you that you're right now a little bit more bullish. So once I see this, I'm definitely not thinking about selling. There's not even a great setup, even though it's working, it's pushing lower. Okay, now we can push lower again. Let's see what's going to happen. Far away from EMA, no setup, and another strong push above EMA. And this time, this low didn't manage to touch the support. So not only I have 3 major pushes to the upside, at this point on, we're even struggling to reach the support, which is indicating there may be a bullish imbalance. So I'm really giving up on shorts. I'm really paying attention to overshoot that we are probably reversing the market, because sellers are not reacting as I would expect if we're going to create new low. Strong bullish rejection here, bullish imbalance, there's a gap. So I'm not really selling. At the same time, I can't really go long into this trend range. Just letting this play out, letting this play out. We're finally breaking. We are breaking strong. Okay, so as right now we are breaking, is there some geometric formation? Because overshoot can lead to breakaway channel, which it did, or reversal. And since right now we're reversing, that means there's a new trend that has to be starting. And how do I identify the setup? I'm looking for geometric formations at the beginning of the channel. So notice I can see some lows allowing me to identify channel that was sloping higher. So what I'm going to do, just copy it, put it at the top, and right now I have bullish uptrend. So I'm just going to redraw the channel, new high, first entry long, pull back, second entry long. Can I go long here? You could. Very aggressive because the single bar is bearish and double bar entry is very big bullish bar. You need to wait for a trigger above this bullish bar and then perhaps drop your limit order. This is way too big, but from context perspective, this is a nice second entry long. Oops. And then you even have a better setup, high low. Notice your stop loss still never got hit. Your stop loss goes always one tick below the signal bar. You're using price action structure to help you protect your stop. But now you get high low confirmation of this second entry long. It is not congested. EMA keeps holding, great bullish bar, much smaller risk. You're with the direction of a trend and the key entry point is holding. And this is a great, easy, high probability setup. And notice what happened next. Similar to what happened with the downtrend, we have overshoot. So overshoot right now means, even if I'm going to make it a little bit wider, clear overshoot. This was way too steep. There was no correction far away from EMA. We can once again get a break or reversal. So now that I'm playing overshoot, I need to understand that I cannot just take the second entry long after overshoot. Okay, but first of all, I'm drawing wider channels because overshoot can generate stronger bearish momentum. If I'm buying after overshoot, I need to get at least high low. Okay, market's pushing lower. Definitely cannot go long here because I'm just going to widen the channel just a little bit. Notice how these candles are allowing me to redraw a wider downtrend and you're still below EMA. EMA was supposed to be holding. This is nice one leg working lower. You can see prices are fitting nice inside of this downtrend. So I'm combining this trend is in play and overshoot is probably generating strong momentum in the opposite direction. I cannot buy, but I cannot really sell because we traded up. Okay, what do I do in this situation? Uptrend is new high, downtrend is new low. Well, I'm definitely not selling because the stronger bias was bullish. So I expect new high more. But this felt second entry short didn't push above EMA and form still below. So this tells me that I need to still respect the bearish momentum. We can still get new leg to new low. Had this push above EMA, that would have been a different story. But the fact that you're below EMA, I cannot go long, but at the same time, I cannot go short. It is quite confusing. You have two patterns, but I'm more leaning towards break new low and then creating new high, possibly. I was expecting new high here, but I was wrong because you can see market kept reversing all the way back down. Right now, market is closing. Yes, prices form a couple of overshoots, which is not uncommon after volatile news price action, because after FOMC comes out, this is the most volatile day you always see because this is the most volatile price action, a lot of buying and a lot of selling. And you can see in trading range like this, pay attention to the structure. If it looks like one steep leg and EMA is holding from the very bottom, don't be so early to sell. But if it looks like a clear sideways correction with visual two legs, then you can expect for market to pivot. Other than that, fairly decent price action. There was one tricky setup right here, which I was very close to taking. I'm glad I hold off because of the congestion here. But if you took it right here, you pretty much didn't do nothing wrong. You just, there was just a little push lower. Market needed to create new low for the downtrend. But I think it was a well-calculated risk. Other than that, pretty simple price action, a couple of good setups. Congestion here. And you can see nice setups here and nice setups here. You just have to wait and you cannot force the entries where there are pretty much none. You need to always wait for market to give you clear bias and then buy or sell when the correction is ending.